Peloton stock, what is the market cap for this biking company, Paul?
Well, first off, look at the stock chart. It was at freaking $19 a share back in March, and now it's $150. So the market cap is currently $43 billion. PE ratio, look at that PE ratio, Seth. What do you see there?
Wow. So guys, again, I'm coming at this as sort of a newbie in investing, of course. I've only been doing this a couple of years, but we want, for pillar number one, we want our PE ratio less than 20. That's not 20%. We just want that multiple to be less than 20. And this one is 530. Now, right off the bat, Paul, that just, do we need to look any further at some of these? I mean, right off the bat, that tells me that it's
let's just look at Peloton. I want to make an announcement. We just hit 8,000 on the nose.
Oh, wow. Congratulations, Paul. 8,000.
Yeah. You too, Seth. We just hit 8,000 subscribers on the nose.
Incredible. Thanks to all you who are watching. You guys are incredible. Paul, go ahead. Let's look at, let's go back to Y charts and look at, so pillar number one is an emphatic X. Pillar number two, how is their profit margin on these bikes?
So the profit margin right now is only 9% to the bottom line. I'm even surprised it's that much, because look right here in the trailing 12 months, it's only been like 2%. So that's kind of interesting. But the gross margin of 43%. And one of the big things for them is they're trying to build not just the revenue from selling their equipment, but their recurring monthly revenue. Like you have to buy the monthly plan in order to get the classes and things like that. I think it's like $40 a month or something like that. But look at their revenue growth, Steph. You see this? This 216 million in 2017, 1.8 billion this last full year. I mean, that's incredible. Now,
this is probably reflected in their marketing too, Paul. Those commercials are all over the place at Peloton.
Oh yeah, and they're awesome. They have hot chicks and everything. It's great.
Yes, and men, and men, Paul, and hot men.
Oh yes, men too.
Okay. Pillar number 4 is profit growth, Paul. Go ahead.
So their profit is a negative 71 million to a negative 71. It's still an X barely, but they're losing less percentage of their revenue, which is good. So they're getting closer and closer to operating profit. Shares outstanding, check mark, from 233 million down to 221.
Paul, let's look at pillar number 6, which is current assets greater than current liabilities.
Current assets, 2.6 billion. One of the things I want to note, inventory is part of current assets. And I like the fact their inventory number isn't as high a percentage of their current assets. That's a good thing. And I believe Peloton builds upon orders. So they're not trying to hold a lot of inventory, which is good. So again, 2.6 billion in cash on hand, 1.0. Oh, guess what we have here? They have more cash on hand than total liabilities. Check, 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 check. That's awesome.
You love that. How about free cash flow growth, which is pillar number 7?
Yeah, free cash flow growth is actually really good. They went from losing 28 million in free cash to gaining 220 million in free cash in the last year, and then in the last full year. In the last 12 months, they've done 550 million in free cash flow. It's still not good for their value, but that's a definite check mark there. They're definitely generating free cash flow now. This is good.
How does that translate into price to free cash flow, Paul?
They're at like 100 to 1. So it's definitely an X on the price of free cash flow. I don't think Peloton is for me at this price. The good news is, would I bought it somewhere lower? I mean, at some point this year, I'd have been a buyer of Peloton based on current numbers. This is all momentum here, guys. This is all based on hype and euphoria. There's no way you go from $19 a share to 150 and 163 in 1 year based off of fundamentals. I mean, that just doesn't happen. So let's figure this out.